Welcome to the new Barbarians podcast. I'm Bill Mann.
And I'm Mark Connors. We're here to deliver insights on how current market events impact the traditional investment portfolios of stocks and bonds that Bill and I traded on Wall Street. Today, we see digital assets as the next frontier for finance and investment.
We're also here to explain how cutting-edge tools like AI and disruptive tech are the new barbarians at the TradFi gate.
So instead of Mike Milliken's innovation on debt financing with junk bonds, today's barbarians at the gate are changing the landscape almost daily across regulation, legislation, and finance.
So hit the subscribe button and let's cut through the noise together. Hello, everyone. Welcome to episode 29 of the New Barbarians podcast. Today is Tuesday, July 22nd, 2025. Podcast will hit the platforms later today. Today, it is just Bill and Mark taking stock. After almost 7 months of podcasting, we recently had a nice run with
Right, it's a
guests.
pullback, Bill. A reset.
Yes.
Let's see where we are.
We are. And yeah, we probably should have done it at 6 months, but as usual, we're a little bit late. But yeah, we actually just had guests on for, I don't know, probably the last 8 episodes. And we have a backlog of guests and we'll bring them back next week. But this week it'll just be Mark and I. So we'll keep it a little bit more brief. And hopefully we won't be too boring talking about what's been happening recently with global assets.
Never.
And
They're like Oliver Twist. They're like Oliver Twist. Everyone's asking for more.
Please, sir, may I have some more? So I'm using my Wolf dashboard. It doesn't say Wolf or anything like that, but I'd like to give them the credit since this is where I get most of my factor performance. So these are in returns. Volatility last week, volatility, momentum, rallied, growth. So it's risk on, baby. Oil went down. And so the sensitivity to oil price went down. Book to market as value also went down. I'm pretty sure in a statistical significance space, those aren't really much to talk about. But I could pull that up as well. And then I get some bullets here about monetary policy. I didn't even realize that the 30-year yield reached 5.07%. I'll let Mark talk a little bit more about the macro news since he follows it more closely than I do. But yeah, inflation accelerated. The Fed, one of the governors was at NYU advocating for a rate cut. And then a 30% tariff threat by Trump.
Yeah. I mean, those things are a dime a dozen. They come and go, as Michelangelo. The song, was it Proof Rock, love song? The women come and go, speaking of Michelangelo. Like the whimsical nature that, Trump throws the tariffs out. I don't know if it'll lose its teeth or not, Bill, but August 1's the next date. And the tariff thing has been, we'll talk about it later, but yeah. It's drizzled like seasoning on a salad. That's what I think.
Well, you'll definitely have to explain that a little bit in a minute when I pass this over to you. So yeah, I guess, and here are the moves in Sigma space. So yeah, it's just a little over 2 standard deviations in sales growth and on the downside earnings yield. And yeah, like I said, it's kind of risk on. And that's about all I have to say about that. And I'll let Mark walk us through the markets.
All right. Well, I'll pick up where you left off on momentum and say that our team of interns that are effectively associates, the amount of work they're doing, Bill and I were able to secure a cadre of interns from City University of New York, City Tech down in Brooklyn. And they've helped us build out our MacroForge database. And Bill, one of them, Gore, was able to pull out through one of his iterations of the Colab notebook, where I call it he's squeezing and massaging, procuring insights from the data. We looked at all of the top percentile moves on the week, and on 21 days. And can you guess what asset had the biggest 21-day move based on its own history? So looking at the top, I think 50 assets, which represent something like $200 trillion of value, equities, bonds, everything. One asset, we talked about it briefly. You might have been trading it recently. One asset ranked in the 95th percentile on its gain in the last 5 days and 21 days. That would be, drum roll,
I'd rather not say because I sold it in Ethereum. I'll guess.
Ethereum. Yep. And as you know, I don't trade Ethereum. I love Bitcoin. I think it's for investors. I think Ethereum's going to has its own purpose. We're going to definitely dive into for stablecoins. The reason I bring it up is, as you know, I love data because there's so much garbage coming in over the gunnels, even anywhere. X, the Wall Street Journal, everyone's got their own incentives about why they're saying stuff. What this team has done by using APIs from our databases, going through this, thank you for helping set it up. I didn't even know a Colab notebook existed. Through this interface, we're able to now get insights from thousands of different windows. And we have a certain way of doing it, Bill, where if we're having a conversation, I'll say, okay, well, I think something happened over the last week. Let's look across this asset class on this time frame and tell me if there's, like you said, a forced 2.5 sigma move. The only one was Ethereum, Bill. Empirically proven, the only one was Ethereum.
Yeah, I bought some futures hoping that it would go up, and then I sold them when I made a tiny profit.
Well, how'd you know the Genius Bill was going to be passed?
And I'm not. I shouldn't be doing that. Basically, that's me. Like trading things in my PA, and that's I should stick with the systematic process rather than
YOLO. YOLO's not bad.
Yeah. Anyway, it's fine.
So that's a bit of what we try to do here is not just share about AI and Bitcoin or AI and digital assets, but also our process. There's the technology accessibility has just been improved measurably, folks, so that now we have a window, we can get information quickly. We're going to make better personal trading decisions too going forward. We'll share about those as well. What you're looking at here is our standard scorecard. You're looking at equities, which is $130 trillion globally. You have that here. Gold's 22 trillion. Digital assets, only 3.5 trillion. Bonds, we have representation here in treasuries and credit, but in the aggregate, that's $300 trillion. So you're looking at basically the entire investable asset class, except for maybe art, collectibles, and real estate. And lo and behold, things that are scarce are up. Gold and Bitcoin are leading the way with non-US equities, not a distant third, but doing twice as well as US equities. So there's a clear pattern that's persisted on the year-to-date basis. Any comments here, Bill, on what you're seeing, reading, writing, how this relates to factors or what the folks in quantitative research are looking at?
So I think in terms of global equities, the macro story is still to be determined. Like, I don't know, when market's been all-time high again, it seems like this has happened like 10 times over the last 2 years. It seems like our theories about monetary policy driving up the likelihood of more monetary policy and risky assets rallying. Like, I don't know, where's NVIDIA now versus what's it up like 40% since?
Yeah, we have a graph on that in a minute. You're right, which is it's a unique asset and it's driving productivity. So that is a variant. I think the monetary policy thing, you talked about how Wall Street got it wrong. You said, here's consensus. And your process was dead on. Consensus was for US equities, certainly not EFA like we have. I'll share the screen back again in a second. I don't want to leave it up there too long. The non-US, I think it's non-North America maybe, but non-US equities up 19% was the biggest miss on Wall Street.
Yeah.
by far.
And that's
And
still doing well. Like I figured that would come out of favor. Like,
no, and the German ETF is up 34% in local. And the idea there is money went to where fiscal policy is expansive. And Germany had to uh, buttress the NATO budget as Trump walked away, and they also agreed to invest in infrastructure. Foreign and domestic money went to Germany. So Germany pulled out of US, back into Germany, and other European money also left US, went in, and some US money went to Europe. Germany in particular, because of the fiscal spend. And this is a timely conversation because we'll talk on later. We've been between the debt ceiling and the Fed unwinding their balance sheet, had a bit of a restrictive monetary policy and a bit of a restrictive fiscal policy, a bit compared to Europe. That's going to change real soon, Bill.
so I'm not sure what the rest of your presentation has, but can we get to the part where AI and digital assets are
Yep.
what we
So
like?
this is now looking across the Magnificent Seven and Bitcoin, and we rolled in what some people call an AI and Bitcoin hybrid, which is MicroStrategy. I'll tell you about the Bitcoin, the AI part of MicroStrategy in a second. So year to date, we saw it was gold and Bitcoin. Well, instead of doing broad market indices, let's just look at equities. The Magnificent Seven are clearly split. We've talked about it. You have Tesla, Apple, and Google down on the year. Amazon almost flat, up 3%. And then the AI success stories in the Mag 7 have been Meta, Microsoft, and NVIDIA. They're leading it. So it's not Mag 7 anymore, Bill. It's thematic, which is why I was asking about factors. It doesn't seem like there's an AI or productivity factor in the offerings that people are looking at. Is that would be more thematic, not factor? Is that why? It's not a style factor?
So I think there's some overlap with the style factors and this what's really just a subsector, I guess, with growth, sales growth being the place where most of these stocks are going to be in the factor space.
So it would bleed into like maybe quality, growth, and periodically momentum. The names, there would be more AI related companies leading those factors higher.
And the quality question is a good one. I should look into that. I don't know when one of these monsters becomes a quality stock, but arguably, they should be.
We'll talk about to the crowd how a quality, if you were, held feet to the fire, what are the three characteristics of a quality company versus, say, a growth company? How are they distinguished?
I think, everyone cares about the income statement. So earnings quality, sort of the ability to convert earnings into cash. So that's probably actually a more rare measure, but yeah, you basically have an earnings quality. So the sustainability of your earnings over the last couple of years. And then there are what I think are more valuable, like old school factors like cash conversion cycle and stuff like that would be like what my intuition tells me. It's not necessarily what.
Talk about that one, cash conversion.
Yeah, so Enron had a ton of earnings, but no cash, and that became a problem after a while.
How do they do that, Bill?
Financial engineering through special purpose vehicles,
opacity,
where they guaranteed the returns of these things that they took off their balance sheet, which was a specialization back in the day. I'm not really sure where all that risk went, but the collateralized credit vehicles are the closest proxy for that sort of thing now. But like that was obviously fraud and stuff. But cash conversion cycle is really just your ability to convert your earnings into cash. So your non-accrual, like you don't want to have a bunch of accrual income that's like receivables forever. Everyone likes cash flow. We value things with discounted cash flow. So that one's kind of an obvious one after you think about it. And then balance sheet quality. So, debt to equity, credit quality. that sort of thing.
Yep. Okay. So I'll go back to the screen to see, as far as I heard you say the word persistence. And let's look at just year to date. MicroStrategy, or strategy as it's now named. The reason we bring it up is because within our, what Bill and I do, digital assets, focus on Bitcoin and AI. Well, Strategy is a company that converted to be a Bitcoin Treasury company more aggressively since first embarking on it in August of 20. And we'll talk about that later. And the person, Michael Saylor, used AI in order to enhance his capital structure to what he says, keep integrity and drive growth. So they're AI and Bitcoin. But look at the other two, Bill. NVIDIA and Bitcoin. Look at year to date. Look at a 5-year. So the last 5 years, compounded annual growth rate. Let's see who leads the charge. Let's put MicroStrategy aside for a second. Yep, NVIDIA and Bitcoin. But maybe it's a flash in the pan. Let's look back 10 years. I know you guys probably already beat me to the punch. Here it is. NVIDIA and Bitcoin playing leapfrog over each other for the last 10 years. AI and Bitcoin. Tough to call that a walk through the tulip garden when it's been over 10 years. As people call it, a bubble. So that is why you and I started this podcast. And I love the fact that we called each other, because as you said, you weren't focused on Bitcoin. I sure was not on AI. And now I think I spend as much time on it as I do focused on, on chain, off chain, and the opportunity for investors in Bitcoin.
So strategy is also with those 3 bars, and the only one that looks different is the 10-year.
And do you know why? He didn't adopt Bitcoin.
He didn't start this until 5 years ago. Or?
Exactly. Even then, even though he's only done it in the last 5 years, it pulled up his 10-year to be greater than any of the Mag 7, except NVIDIA.
Yeah. So it's probably long overdue. How do we explain strategy to a kindergartner?
Order some pizza. We're going to be here a while. Strategy, I guess I'll talk about his origin story. So Michael Saylor, serial entrepreneur, only through his one company, a business intelligence company called MicroStrategy, recently changed to just Strategy. In 2020, he looked around the room. He said, we are a $500 million top line company generating $100 million cash a year. We have $500 million of cash on our balance sheet. The Fed just lowered rates to 0. Therefore, our cash is worth nothing. They are sending out stimulus checks. Assets are going up in value. We are a software company. We're getting drawn and quartered by a dovish monetary policy. Our cash is like a melting ice cube. I have to invest it in something. I don't want to be bought. Buying software companies never works. So he looked around and he did a extensive view. And then one of his buddies who's been talking to him about Bitcoin, he said, tell me about that Bitcoin thing again. He went down, he said, this is it. This is a network that I saw early on with Apple. This is a monetary network. I'm buying this. And then they went in slowly with like 100 or 200 million dollars. They did Dutch auction. They had to do so much regulatory groundwork, Bill. Think of it. We're going to buy Bitcoin. I mean, he owned a lot of stock, but not all of it. How do you do that reasonably without looking like jamming something down investors' throats? How do you do it equitably? The guys spent time. So that was MicroStrategy defensively. And that's how most people get into Bitcoin, is if you're fat and happy and you're an individual with $50 million, or you're Microsoft that is a leader and has hundreds of billions of dollars of cash, or not 100, they have over 100, I believe. And you have a leading business so you can reinvest. You're not going to go out and review a small, 1% of investable assets type of, but if you're on your butt, if you live in Argentina and you're being inflated away as an individual, you look. If you're Michael Saylor and you're being overrun by Microsoft and you're getting poached, employee poaching by better capitalized companies, you're going to look hard for something. That's what Bitcoin is. He saw it as the monetary network, like the internet, and he had to act. He didn't have the luxury of waiting to see how it would turn out. So he converted it. And now the next thing he did, Bill, which is a crazy move in October, surprised everybody, even people who knew Michael Saylor, is he said, now I'm going to take the largest at the money equity facility ever created at a sub $100 billion company, which is what he was at the time. He then said, I'm going to be buying Bitcoin forever. I'm going to be taking equity, issuing equity, and buying Bitcoin because I believe Bitcoin will be compounding at over 21% a year for the next 20 years. And there's no other asset that will do that. So why wouldn't I have someone sell my stock, which we all know it didn't generate it, buy Bitcoin, which we called flubber last week, which is that was it Bill Douglas, Michael Douglas, Bill Murray, who was the guy in Flubber, Doug McMurray, I think, who was the coach of the basketball team in the Disney movie where he created this substance that allowed his basketball players to jump up high and dunk. That's basically what Michael Saylor found. He found this created substance asset called Bitcoin. He shoved it into an inert equity wrapper. It all of a sudden started behaving so differently that everybody on Wall Street wanted it. So that's what he did. He created, instead of being buying oil fields and trying to redo them, he bought what no one else had in the S&P 500, very few, an asset that makes your equity have more upside than downside. It was ingenious, and the only reason others haven't done it is because they don't have to, because they're doing just well enough. Long-winded answer. Hope that gets people in the neighborhood of what's going on.
So the capital structure arbitrage, one thing Jennifer said last week was that MicroStrategy, Michael Saylor is sort of selling different parts of the Bitcoin return profile. And so with, selling volatility and some of these debt-like instruments, converts and things like that, I think are fairly straightforward. But what about like pipes, public investment and private equity? And like, who is interested in sort of buying these different parts of the capital structure for a pool of Bitcoin?
So let me start with my area of knowledge, and I'll go into what you asked. You're right. I think you glossed over, and maybe because you know it, and maybe others may be worthwhile talking about. People say Bitcoin's too volatile. That's a shared meme. We talked last week with Jennifer Murphy at Runa Digital, where not only is it coming down and declining in volatility, but its volatility is more up than down. It's very different. It's experience. It's like saying, oh, there's temperature. Well, you're not saying if it's hot or cold. Volatility is uncertainty. Most assets we know when it goes uncertain, it's to the downside, not the case. So Saylor found a way to jam Bitcoin into a convertible. And the people who do understand volatility are convert traders and options traders. So those are the people who first came in, and that's why he was able to go from equity to a zero convert eventually. He harvested the volatility, still not understood by the majority of people in the investment world. So that was the first step. He turned what is a liability to most people into an asset that was in demand because he found the right audience.
Okay. And then before the ETFs, this was also like the only way to get exposure to Bitcoin or in the equity markets.
And that'll start to go away more. But now that he's going to be in the S&P 500, I don't think he's in there yet. I think it's shortly. He's been accepted, but it's not in. Then if you're in a tech equity fund, you might have to buy it. And you can't buy an ETF because it's not a tech equity. So he still does have some additional demand because he's now being hoovered up by the passive world, passive equity world, and factor world for that matter. Now going down, he then did preferreds because they had some cash flow, different dynamics. But as far as a pipe, that's just speaking to another type of buyer, illiquid buyer that has a mandate that may not have exposure to this type of asset. So all these folks are doing, let's go to equities. Equities never seen this, and certainly the options folks. Once you go to an equity, there's obviously a strip of options against most of them. Well, since Saylor built up his market cap, that strip got bigger and bigger, and the demand for equity got there. And then he went into preferreds because that's another class of buyer that wanted income at higher rate than zero from the convert. So he's just tapping. It's still such a small part of the universe, Bill. Bitcoin is such a small part of the investable universe. And this guy at CIS Capital, who I met at Prague, I think it's Richard. Yeah, I forgot your last name, Richard. I'll come back to you. Everyone else in the call probably remembers his name. He had a great term for it. He said that it's a it's a release valve, almost like an emergency pull by the traditional asset world. What is the Bitcoin treasury? What is strategy? It's a last gasp by people trying to outperform, because if you didn't play 7 equities, you're down on the year. Down.
Yeah. And yeah, over very specific days and weeks of the year as well. It's not
Yes.
like the passive thing just works. I mean, it certainly has worked well for many years now to just set it and forget it.
And that's, in what your folks, your background in trying to smooth that path to returns, which a lot of people say is worthwhile, especially the tax advantage folks who hate drawdown, because they accrue tax free every year. Every day they're not making money. They're giving up that unique quality to compound tax free. They like what a quant or a risk adjusted actually has a monetary return. It's not just a pile of malarkey. It does have an economic benefit. So your folks, your peeps in the quant world still have a role. It's just that the retail person, believe it or not, has more of an appetite for volatility than the institutional side. Hey guys, if you got anything out of that last segment, don't forget to like, comment, and subscribe, as it really helps us grow the podcast and bring you great content. Thanks for the support.
I think that's right.
Counterintuitively.
Set it and forget it is a nice term to describe some of what systematic investors do. But can you tell me where that phrase was originally coined?
I can't. Do you know?
I believe it was the rotisserie chicken maker from Ron Popeil. Set it and forget it, and it will, cook your rotisserie chicken within an hour. And there was an ongoing commercial for years.
I might need that.
Ron Popeil was also inventor of Popit, which were like small Tupperware containers. And, I bet he's worth like $1 gazillion with all of the great things he did in the infomercial world, which is probably an area where like you can't even make money anymore.
No, you got to try to do a podcast. But Bill, we got to feed people. I'm glad that you're doing a one-stop shop here for folks. I do have a golf tournament I told you this weekend. We're going to entertain family here at the Shark River Beach and Yacht Club. It's a few motorboats, but we do call it a yacht club. And I might have to do some set it and forget it, because I also want to play some cornhole. Thank you for that.
Nice.
I always am better for our engagement, Bill.
And sorry, this is a family event with golf,
yes,
motorboats,
golf, motorboats, and cornhole, and food mixed in.
And you call it a yacht club?
Yeah, it's a yacht
golf
club.
Course?
It's 2 venues. Golf first, and then we will drive over to the yacht club, Beach and Yacht Club in lovely Neptune, New Jersey, and fire up the barbie. Is that going to be a scramble?
How are you going to organize the golf?
Good question. It's a mostly father-son, and Kelly's family's ginormous, and they still talk to each other, which is not a little uncommon for an Irish family after generations. Usually there's someone screwed up and they don't talk to who and what, but they do. So we get together.
Cool. I find that the scramble format is preferable for these types of
yes.
things.
And we don't have any scratch handicappers, so there's no pride in trying to do a match play and post a handicap. That sets an all-time high for the course. All-time low, rather.
Important to keep things moving along.
And hold on, talk about moving along. I gotta do this, Bill. I can't walk away from the only thing I talk more about than Bitcoin is this pile here, talking about a high score, the debt ceiling farce. So we usually look at that debt to GDP graph like we did last week, where our debt to GDP today is as high as it was in World War II. And the question is, today, who are we fighting? And we're fighting to stay in office by using money.
But it was perfectly flat that we were doing a good job managing the budget for like 6 months.
Don't tee me up.
Look at that. It's totally flat. They decided they didn't want to borrow any more money, and they were responsible with the budget.
They didn't move the money for 6 months, 7 months. But what they did is they didn't raise the debt ceiling, Bill. But what they do, like Yellen did in 2023, over here, the last time the debt ceiling was, they simply decide not to pay the postal workers' pension for a few months.
Buy now,
Literally.
pay later.
Schwarzenegger had to pay the pensions in scripts when he was as governor back then. Not that Newsom's got it any easier. Our country writes IOUs to the people who work for it. And you think that everything's okay? Folks, that just use AI and just read that. Has the US, California, New York, or the federal government ever written an IOU to a pension worker in the last 5 years? You better sit back and you can have a lot of reading. We do not have the cash to pay for our entitlements. So Bill pointed out, why was it flat? Because there was a congressional debt ceiling that kicked in. We're probably going to get rid of it, that whole dynamic pretty soon. It's a false measure, a measure of false security or probity that we have the ability to limit debt because, again, we have 100% debt to GDP. We have deficits that are approaching that of wartime or a global pandemic. But that broke, Bill. And you know when it broke? See July 3rd? That was the last time. Because July 4th, we signed one big, beautiful bill. And that one big, beautiful bill needed one big, beautiful budget to pay for it. And that's why that little thing sticking up in the last couple of weeks is not a fuse that's going to light. It is a tracer bullet going to the next level of debt that we're going to have. And that plateau isn't even started yet.
I can't help but have my eyes just kind of create a straight line here, and it doesn't look like we're yet where it should be. You know, if you just drew a line through the small peaks and troughs during these fake periods,
nope,
it looks like we should be well above, 37 into the 38.
Well, hold on a second.
Range.
Tell me, I think I know what you're talking about, but that, I don't know if you're joking, but that actually is, I think, really might pull the plug on this whole thing. What do you mean by that?
Well, the last time I saw a flat line, it looks like if you just kind of drew your mouse up to that next like peak there, it looks like, maybe that money needed to be used. This kind of looks like a straight line that goes up to until infinity.
Yes. So it is in all of these it's like a false summit is what it is. And the amount of financial engineering, you're talking about Enron, the amount of financial engineering that has to go on and accounting in order for us to say we are at the debt ceiling limit shows you that there are more draws on capital than capital that we have. And that's not even taking into consideration the rate of change of ages and retirement and medical needs of people that are mandated. So that's why Larry Lepard wrote that book, The Big Print. And the only way to solve these issues is to keep printing. And I'm going to wait on that one. And that'll lead us to the several pieces of legislation, Bill, that came out. And back to how we solve this debt. Let's create more buyers because we're going to be the same and larger seller. That ain't changing. We just have to get bigger. And the way you get bigger is you get more stable coins that require T-bills as collateral. Hello, Genius Act. It's something I told you. I was with Fred Pye from 3IQ. We were on stage at this event in Toronto in August of 22, and I was new to crypto. I was on stage. I was 5 months in. I said, this is the biggest no-brainer. Janet Yellen, I was wrong about who would realize it. I said, Janet Yellen's going to read about stablecoins, and she's going to realize it's like walking through a closet and then opening the door into a new realm like Narnia, where there are hundreds of billions of buyers out of nowhere, horses that can talk, the whole thing. But Janet didn't know where the closet was. Scott Bessent did. He said trillions of dollars of stable coins in the next, I don't know how many years, he said 5 years or maybe longer. He gets it. He's like, the one thing we have is reserve status only because we're the biggest. And we are 45% of all financial assets globally. The dollar will persist and maybe inflate it out. But if this digital thing works, they need bills. And he's like, I got bills, baby. I got bills to go. He issued 10 trillion in the last 4 months. That is where the release valve is. People in traditional markets, Bill, are going into MicroStrategy to take on that volatility, to get out of being a moribund asset. And the US government, likewise, is going into stablecoins and offering regulation so banks can engage and have them proliferate so they can jam the growing pile of bills into collateral for stablecoins. It was there to be had. It just took some, I mean, obviously, an administration that is clearly pro-digital assets. I mean, to a degree that no one expected, including me.
So that old clock in the city that shows you like per capita GDP, I assume that's looking pretty ugly now. With my children, like, so my 13-year-old daughter, she might not be in the denominator of that debt to per capita number. Where in the digital asset space should a 13-year-old put their piggy bank
on the investment side? If you want to look at persistence, monetary qualities, size of network, and security of network, there's only one. It's Bitcoin. If you are looking to do something else and your frame of references follow a different North Star, then you can have at it. Like Ethereum outpaced Bitcoin in the past 5 and 21 days. So if you had a narrow window, go after that. But I'm talking around your answer because of compliance. As you know, I am only in Bitcoin.
Yeah, this is not investment advice, but
we can't give investment advice, but we can tell people what questions are reasonable to ask.
And part of what I guess I'm also getting at is just like 13-year-olds might forget these like encrypted passwords and stuff like that. Like, do you think it's going to be more accessible to have like that safe custody version of these things?
And that's one reason why I think Bitcoin why the ETFs were just proliferated, because talk about set it and forget it. I'm going to come right back to your question, the 13-year-old, and show you what a wrapped Bitcoin, making it easy. Wall Street loves options. And if you give them your Bitcoin and say, hold on to it and wrap it in ETF, they're going to have optionality and you don't. And that's fine because you're going to keep the economic value, but you can't move it. You can't borrow against that coin. So the Bitcoin ETFs, look at the flows over the last month, more than any other ETF except SPY. SPY is part of a $130 trillion asset, $130 trillion. And on a net basis between VU and SPY, if you want to net those two out, they cross. And it's up 50 billion in the past year. It's 150 billion now. It's the fastest to 100 billion by 6 or 7 times faster than any other ETF. If that doesn't have an RIA question where they should put a 13-year-old's money for one of their clients, then find a new one. If they don't have a great answer on volatility, if they say anything other than it's positive, on regulation, it's clear. There's a legal and legislative backing, and there's industry backing by several laws. There's no credible reason other than I have no idea how it works. As one person used to say, you're fired. And I'm not sharing my screen. Sorry. I just want to share this one graph with everybody. So we have a scorecard of performance, which everyone loves. This is a scorecard of the largest ETFs. And VU, Vanguard's, is the cheapest. And it's grown because passive likes their basis points. So it's a basis point cheaper, maybe a little more, 2 versus 3. SPY hasn't taken in as much, but they trade it more. SPY is a trading vehicle, even though it's more expensive. AG is a bond AG, bond is another bond AG, and bills are obviously what you think they are, just a T-bill. And they've reduced over time. People are now getting out of bills. Gold, you can see what the flows are to gold versus Bitcoin. So we would look at this, and the ETFs have just aggregated mostly with IBIT, but now Cathie Wood is up there and a little bit with FBTC.
So we're a little over 45 minutes. I think we were going to try and wrap it up a little bit. Yeah. I did want to, since we're taking stock, sort of throw in a commercial here. To our listeners, we are always looking for suggestions about topics that you want to hear about or guests that you would love to have us bring on. We are actually live right now, and we more than welcome people to ask us questions live in the chat, but also please feel free to comment. We look at our social media accounts to see if anyone has any questions. But please do ask away. And we also welcome constructive criticism. We talk too much, we talk too long. We're aware of that. So, you can hold those types of comments if you choose, or we would also welcome that type of feedback.
Yeah, and what you want to hear, as Bill said. Bill, I don't know if you noticed, but last week one of our shorts that got the most was about how to raise money. So I think if we tend to be more prescriptive by saying, well, how do I look at Bitcoin, like you helped drive me to, or last week, how do you meet people? Well, you got to get off your butt and go to New York City, or go visit and pound the pavement and run into people. Because I got a call from someone saying, can we talk, because I do want to meet people. Or how Chris Mayer, your fellow coach, talked about how he's being very prescriptive about solving accessibility issues and making money. So that's us saying to you guys, that's what we hear you guys like. If that's the case, give us color. If you want to hear more about research, we can do that too. But I think you guys want practical, how do I get a job? Where do I put money? How do I use AI? I think we're going to try to keep doing better jobs of that with our guests going forward.
And yeah, maybe we should try this more often. Traveler Jeff just asked, well, he said more macro. So as we wrap it up, why don't we try and give your macro playbook in
Well,
1 minute.
So economics, markets, and players. On the economic front, the fuse, Traveler Jeff, has been lit. That means the debt ceiling is off. We are on pace, as you see here, where we're ticking up at a rate that will continue to go at 9%, Jeff. So debt growing at 9% means that if you're not increasing your savings 9% a year, you're losing buying power for you and your kids and everybody in your circle of wealth. So that's the first macro. The second macro is that we don't have to fire Powell. Powell's going to be forced to lower rates because of instability in markets. The US is at 4.5% in the front end. All other G7s are diving down towards 2 because of their growth rates. If we have that much of a bandwidth, we've always had issues. Think of August 2022, when, again, we were raising rates faster than other countries. We almost blew a hole through some UK pensions, and the central bank had to bail them out. So I think a volatility event will force the Fed to change policy, lower rates, and then it's going to be money printing. And I think we'll hit our 250 price target again, not again, on Bitcoin before the year end. Anything else on macro?
Is volatility event like a fancy way of saying sell off? Like what?
Yeah, thanks for that. Because volatility event, I would say it's more of a funding or financing event. So it would be a spike in a currency. So when we think of macro, Traveler Jeff, we usually think of the price, supply of money, or the impact of a global commodity like oil. So it's something that affects everybody globally. And since we are one water table, especially from a US standpoint, what we do is felt everywhere. So a macro event would be if there's a funding issue in one of the G7 countries, if there's a Japanese spike in their currency or their bonds, like we had in August of 2024, may come to the rescue with easing or a rate cut, emergency rate cut. So that's what I think. Global funding markets are not stable. So
Barbarians going to come in and say like we're
3 months away from that.
Won't the libertarians come in and say like we don't need to be the global police of the financial markets? Like let the G7 go away.
It's self-preservation, because even though they're buying less of our debt, and yes, we are becoming more financially isolationist. We're going to allow our banks to buy our treasuries for zero, a collateral down. That hasn't happened yet, but that will. But no, Bill, we have a tremendous funding calendar, and we need stability in markets so no one gets scared. We have to not shill, but we have to sell our treasury. We need a calm market. Think of Kevin Bacon, all is calm, stay well, slow down. And that's what Besant is trying to do. We have everything under control, calm down. And if anything pops up, like the MOVE index, my favorite barometer of treasury funding stress, if that pops up to 120, 140, there's going to be the debt here will be higher. The Fed will start buying again, and rates will be lower, and Bitcoin will be at or through the price target. So that's it. Funding markets, Jeff, is the answer. I think we'll have something problem in 3 months, or we're going to have a tremendous papering, meaning banks are going to allow to buy as many treasuries as they want, which in effect is a new kind of QE.
All right, so now we do have to wrap up. We're almost
Well over.
55 minutes. Earlier, when you brought up Schwarzenegger, like I started sort of wondering about this Running Man remake, and I would love to sit here and do some Schwarzenegger lines or something. But for now, I'll just say I think maybe my favorite was in Commando, when he says, "Why don't you blow off some steam?" And I would rather not describe what happens right before that. But that's a great movie if anyone's never seen Commando. It's actually Alyssa Milano plays his daughter when she's probably like 13 or something. He's just trying to save his family. So
Just like any guy.
Yeah.
Hold on, just like any guy today, like Jeff, you're trying to help your family. Let's tell the government to blow off some steam and buy Bitcoin. Get rid of our fiat. All right, we may have to do a meme on that, Bill.
Okay.
The new Commando is the Bitcoiner.
All right, I can do that. That's a good idea. I'll get working on that tonight.
All right. You are the Liam Neeson of AI.
There you go. That's cool. So yeah, I guess, and we are getting more feedback from Traveler Jeff. Thank you very much. Gen X Power Show here. I appreciate that, certainly. And so I guess we can wrap it with that, and see everyone next week when we have a guest again.
Cheers all.
Thanks.